Hi guys, we'll go through the introduction of prediction market, how it works, what is it, and we'll also walk through the speedrunethereum.com prediction market challenge. Uh, so yeah, like prediction market is one of the biggest use case of on-chain application. If you heard about Polymarket, so basically the difference between Polymarket and a prediction market is like Polymarket is an app which helps you create prediction market. And in 2004 US presidential election, during that, like there was this prediction market created on Polymarket, which where people betted around 3.3 billion dollars of money between Trump and Kamala Harris. So yeah, like what prediction market is, like prediction market, you can think it as a betting market where user bet on the future outcomes. And the difference between the traditional betting platforms and prediction market is that, like in betting platforms, people usually, when they bet, the bet is locked in, but in prediction market, like people can usually trade this bet until the market is closed, so they can trade the outcomes. And since it's on chain, like all the benefits of composability, interoperability comes into play, and people can also trade in the open market these outcomes until the market is closed. So why prediction market? Like it's best, I think, best kind of a forecasting engine, like where it aggregates the belief of the people into probabilities, and it's often more accurate than um, experts or polls or pundits. It has skin in the game, so like traders are incentivized to get the profit, so they had to make some good decisions, like select the good outcomes and also the trade. It decentralize the misreport of the thing, because like you are betting, and if you lost the bet, you are basically lose the money, so you are discouraged to provide the misinformation. There is dynamic update since price fluctuates, and the probability also increases decreases as the information comes out. So some of the example of prediction markets are elections, you sports, marketing events, or geopolitical outcomes. Even researchers use this, can use prediction market for their research. And yeah, I mean, so in Speedrun Ethereum challenge, there are different kind of prediction market, but in Speedrun Ethereum challenge, like we are going to build a binary prediction market. So this binary prediction market basically has two outcomes: yes and no. Yes and no are basically the shares which people buys, and it defines the price and the probability. So let's suppose, and the way binary prediction market works is like, in the end, when the prediction market ends, the price of the outcome is complete, like, and the price of the losing token basically went to zero. So for example, like this is one of the prediction market being created on Polymarket. And you see like this prediction market says like will Taylor Swift be pregnant in 2025. So it has a fixed date, and here people can buy the tokens of people can basically buy the shares of yes, or people can buy the shares of no. And since this is already live, people can start trading these shares, and the price of it increases or decreases, and also the price basically represents the probability of the outcome. So yeah, like in prediction market, basically price defines the probability, like opinions of the people goes into price, and the price is which which defines the probability. Like if the price of a yes token is high, it means the probability of happening that event is high. And until the fixed date, like people can start or stop trading the things and do. Cool. So the while building a prediction market, there are these three main components of a prediction market, or tokens. So basically, in previous example which we saw, right, like there is these shares like yes shares and no shares, which people can buy. So basically, these are basically in our prediction market are ERC20 tokens. So we'll mint a bunch of yes tokens and a bunch of no tokens, which will represent the shares and the outcomes basically. Yeah, and another component of this prediction market is uh, liquidity thing. Like automated market maker, where like till the date, like the till the prediction market ends, people can trade tokens or swap these outcomes and earn profit. And the third part of this prediction market is Oracle. Oracle basically is the one which settles the thing on chain and gives the result out to the world. And this is where the prediction market stops. There can be various kind of oracles, but yeah. And yeah, like let's go through how the setup of the challenge looks like. So if you go to speedrunethereum.com and go to the challenge 7, which is a prediction market, uh, I already did some steps. Like it gives you a nice introduction about what prediction market is, like which we already went through, where liquidity comes from, and we'll also go through this during the workshop. So just to be quick on time, I already ran these steps like npx created. These are basically the challenge setup steps, and yeah, like let me just close. So I already ran the command npx created prediction market, and it scaffolded and challenge for me. And now, like as always, like if since this challenge are built on top of scaffold, so we have this three magical command: yarn chain, yarn deploy, and yarn start. So I have this three terminals split up here. In the first terminal, we run the chain, yarn chain, yarn deploy, and yarn start. So if you look at the code, like you can open this in your code editor, but if you look at the code, uh, the challenge basically comes with these two contracts. One is the prediction market dot solve, which we need to fill out while following the challenge, and the another one is prediction market token, which basically responsibility of it is to basically mint the yes and no shares. And yeah, like the in the challenge throughout, if you go through the challenge, basically you will fill out these functions which we have given in the template. And yeah, let's look at the front end, how it looks. So I started the front end, and if I go to localhost 3000, yeah. So as we saw, right, like prediction market has these three important component. So challenge also comes with these three important components: the liquidity provider, the oracle, and basically the users who will be interacting with the prediction market. So let's start with the liquidity provider, like how it is set up. So yeah, like to start a challenge, let me also deploy it once again. Yeah. And what I've done is like I set up the burner wallet as a deployer of this contract. So he is the liquidity provider. So liquidity provider is the one who initiates the market by putting some initial funds. So you see, like current prediction market collateral is basically one it. So this is the one which is put by the liquidity provider, and this thing it kind of a bounty like the winning price pool. So the winning price pool is 1 ETH, and the token value. So basically, while bootstrapping a prediction market, you also need to define. So since we are working on this binary prediction market, while bootstrapping a prediction market, you need to define the winning price, like what will be the winning price of a winning outcome share. So the way, if you look at Polymarket sets it at 1 USDC. So like if a winning outcome wins, like each share will cost you 1 USDC, and the other basically the other outcome will basically cost you 0 USDC. So that's what we have done in the challenge as well. uh, so if I go to the, yeah, so you see, like here we defined like what will be the winning price of each share. So here we have defined it as 0.018, and basically these two values are the ones which defines what amount of token shall be minted, like what amount of shares can be minted. So if you do like 1 divided by 0.01, so it says, right, like uh, to get like the winning share to hold the price of 0.1 ETH, we need to mint 100 of each tokens, like the yes share and the no share. So that's what we did. We minted 100 yes shares and 100 no shares. And we have, so like liquidity provider can also add and remove liquidity. And yeah, like this is the important thing. So if you look here, it says like amount of yes tokens locked away by prediction market. So this is very important concept. Like you need to lock certain amount of tokens initially, because if you don't lock it, like the prediction market might swing completely on the initial buy of the token. So if you look at this example, um, let's suppose like if we don't have the locking mechanism, like if we don't have the locking mechanism, if we don't lock initial tokens, let's take an example where we don't have a lock. So the initial market, like if we look at the current state of the market is basically betting on will the green car win or not, and LP deposits won it, which means 100 yes and 100 no token, each represents 0.01 it, like the winning share. And if you don't have the locking mechanism, initial sold of yes token and no token are 0. Alice buys just one tokens, and once as soon as she buys the one token, you see like the probability has completely went to 100%, even if the one token is bought. So like this basically is kind of you could say like fluctuating the market a lot. Like as soon as a person buys the token, the probability went to 100%. And if a new user comes to the prediction market, he might be like, oh, I mean, the probability is always already 100%. So they might start betting on yes tokens only. So yeah, like, and if we now like look at the logic of locking the token, so here what we did is like here we also took the example like, oh, like there might be the chance that there is always not 50% chance of the prediction market winning. Like there might be the case where green car is more powerful. So the liquidity provider also sets the initial probability that, oh, like green car, the probability of winning green car is 60%, and the lock is 10%. So like we locked 12 and 8 tokens out of 100 tokens. And now if Alice buys 1 tokens, you could see like the new probability just shifted from 60 to 61%. But in the previous case, if you see, like initially the probability was undecided, and as soon as the Alice buys the token, it went to 100%. So that's the important thing. Like once we lock the token, you could see, right, like Alice buys one token, it still didn't move to 100%, it just moved to 61.9%. So that's the importance of locking some initial set of tokens. And yeah, like some of the benefits is like it anchors the starting beliefs that if LP provider feels that a certain outcome is more happening, then he could set the probability initially. It again prevents the wild swings from early trades. If new user comes to the prediction market, they can see like there is not a token who is completely winning, and it also avoids some maths. Yeah. And like yeah, like the initial UI, so the main thing of the prediction market which we are creating is like we are betting on this question: will the green car win the race or not? And here we have a dummy UI. So if you start the race, it races the car. We have built this, and it's basically a 30-second race so that we don't consume a lot of time. And once the race has started, people can start betting. So let me open a new incognito tab. So this guy is the one who bootstrapped the whole thing, the liquidity, and he will be also acting as a oracle. We'll look um, after some time. And if I go to user, here basically I can buy the tokens. And basically this is the part where like you need to set the market. So if you go to the challenge, scroll below. The important part about creating this market is like you need to make sure that the final price, like the final winning share of the winning outcome, is always the predefined value. So in this case we set to 0.1 it. So we need to make sure like no matter if people buy initially like let's suppose like initially someone buys the full 100 token, the price is 0.018. Now like if people buy, if no tokens were sold 20 and yes tokens were sold 80, so the price we need to make sure that the final winning outcome is 0.018, like it doesn't exceed that. And yeah, so if we start the market now again, like if we start the race, and let's start betting. Like here I have an incognito tab, and let's buy some amount of yes tokens, maybe 5. And you see like now it's increasing the probability because people are buying, and the yes token price is basically increasing. And I will also open a Chrome, like so that I can get a new user here, and maybe this guy buys no token. Let me get some faucet funds. So now no token is costing like 0.026 it, because like the yes token already increases the probability, and now if I refresh, the probability is back to 50-50% since both of the people holds 5 tokens. Now let's suppose like this guy buys more no tokens, and now the probability of yes token is less and no token is more, so the price of no token will increase. And let's suppose now we settle the market, right? Like once the race is over, you see like the green car is already won. So the oracle, so here for the demo purposes, like the guy who created the prediction market is the one acting as a oracle, and he will be the one posting the result on chain. So yeah, like we need to now trust that the guy is doing the right thing. So he reports yes, like the green car won. He reports the outcome, and yeah, like the prediction market has now ended. And in between time, like people could have traded the yes and no tokens, and cool. Yes and no tokens until the price fluctuates. And now if we go here, like this is the guy who lost. Oh no, this is the guy who won because like he betted on yes token. So you could see like he got 5 tokens of yes. So the since the predefined winning price was 0.018 and he hold 5 shares of yes token, he could now withdraw like 0.05 amount of it. And if you look at the loser, obviously he will have 0, because that's how binary prediction market works. Like in the end, the outcome which loses has holds the 0 value. So yeah, like here all his money is gone, and if you come here we have 0.05 it, and we could redeem like 0.05. We could redeem the 5 token. We basically put in the 5 tokens and withdraw the amount of ETH from it. And yeah, like this guy's uh, balance has increased. And another thing, so if you go through the market, there are also some gotchas for liquidity provider. So we need to make sure, like there might be the thing where liquidity provider might might lose money. So we have explained that logic here nicely. And yeah, like there are also some good things if you need to explore more. Like you need to add a deadline. Like here, the deadline is basically the report of the winning of the outcome. But usually in prediction market, like there is this fixed date. And yeah, like again, like Oracle. Currently, we had the centralized Oracle where the creator of the prediction market is the one who is posting the result. We could also rethink like the token locking mechanism, the reward of the LPs. Like currently, we were giving some reward to the LPs. So like when the tokens were bought and sold, we were giving some of the things to the LP. So if I come here, so there was this some amount of fees which was being incurred when people were buying and selling the tokens. So you could also change these values a bit and try on. And yeah, like you could also think of alternative market designs. So the way Polymarket work is like they use order book, like it's not decentralized. But here we have used AMM with a linear algorithm. But you could also find some different market design strategies. And yeah, like this is the case where LP can lose money. Yeah, and if you have, like if you want resources for this, you could go through this slide. Like Scaffold-ETH is the one on which these challenges were built, Speedrun Ethereum and the slides.